is always a great event, and happy to be here today to talk a little bit more about innovation. You've heard about regulatory innovation and the issues and challenges on that front, and I think from this panel's perspective, we also want to talk about some of the challenges from a business perspective, because right now, what's going on in financial services is pretty exciting, and there's a lot of development, a lot of benefits, a lot of risks as well, but on the business side, there's a lot of opportunity depending on whatever perspective that you come at this from. Whether you're a fintech, the fintech types of firms are moving very quickly. And technology is evolving, and different types of business models. And I think it's obviously a reaction to a few things, but of course, just the dynamics and the demographics of how people want financial services delivered. Everything today is done on the phone. I don't think anybody under the age of 30 has been in a bank branch, and I don't know if ever. And so, we're seeing a lot of things happening, whether it's payments and lending, cryptocurrency, across the board. On the other side of the coin, for banks, that model has changed quite a bit as well, right? So brick and mortar is a little by the wayside. There is a need. I think every bank, whatever size you are, and certainly community banks, should have a fintech strategy, because whether you're in the partnership model or you're just trying to deliver new products and services, you have to look at this and see and evolve as the technology and the businesses are evolving. So we're going to talk a little bit about that today. Just again, my name is John Betcha. I'm CEO of an advisory firm called FS Vector. Co-founded the firm with Raj Date, based here in DC. I come at this from my perspective is on both sides of it. I spent a number of years on the banking side, both as a lawyer, chief compliance officer, and did some government relations work. Then I got pulled into fintech, and I guess fintech on steroids. So I was working for a cryptocurrency firm in the blockchain space, and then most recently on the advisory side. So first, I'm just going to also ask the panelists to introduce yourselves, and then we'll get some Q&A, and also we will open it up and hopefully look forward to having questions from the audience as well. But let's start with Mark.
Good morning, Mark Butterfield. I run the innovation team at First National Bank of Omaha. We're a $20 billion bank based out of Omaha, Nebraska. Fun factoids, oldest bank west of the Mississippi, and the largest privately held bank in the country. So we're at our 6th generation family-owned bank. It's a unique structure, which I enjoy to be a part of. I've been with the bank 18 years, and then this is a newly created role, about 2 years old, and a department of about 8 people.
Yeah. I should also say Mark has the best headshot of all of us.
Oh, yeah.
You can't go wrong.
I want to bet on that. Nobody thought internally that I'd actually submit that picture, so I did.
Hi, I'm Josh Rowland. I'm the CEO of Lead Bank. We're a 90-some-year-old community bank based in the metropolitan area of Kansas City, Missouri. We have about $360 million in assets. We're family-owned. And we, a few years ago, began very much in earnest trying to think hard about rebooting our enterprise and employing channel partnerships with fintech companies to make that possible. So we're on that journey, and we're having a good time with it.
Good morning, my name's Mark Schultz. I'm Capital One's Fair Lending Officer at Capital One Fair Lending. Our compliance department sits within risk management. So I have a good view of what risk management's all about. I've been at Capital One for 15 years, and prior to being at Capital One, I spent 15 years at the Federal Reserve.
Hi, Adam Galler, Cross River Bank. I'm sure Phil said enough about Cross River already, but I've been with the bank 11 and a half years and focusing right now on third-party partnerships. Much similar to my fellow panelists, I think the bank's focus is to facilitate credit and payments throughout the banking ecosystem, and hopefully by the end of the day, you'll hear more about that from all of us.
Great, so let's get into it. Let's talk a little bit about what some of the objectives are when you look at either having a fintech strategy or in the business, the partnership model. Maybe you can give us a little kind of overview of how you look at this, and maybe we can talk about it from both perspectives. I know we have mostly bankers here on the panel. I guess I can represent the fintech side, but as a fintech firm, starting out, you have a great idea for a product, and the question then becomes, how do I get to market, and how do I deliver this? Either the regulatory hoops that you need to jump through, having the rails through traditional financial services and things like that. But so there's a lot of things to think through and on both sides of the coin. But maybe Mark, you can start off and just saying how you guys looked at this and what do you see as some of the opportunities?
Yeah, I think for us, it was about starting out by casting a wide net just to understand what the fintech ecosystem was about, to really not have a good strategy or any strategy from a fintech perspective. So we joined consortiums, we reached out to other banks doing similar things, and just spent the first 6 months trying to learn and understand what we should do. And then concurrently with that, we worked with the executives to figure out what are our macro themes, like what do we actually really want to focus on. And it all came down to a big theme of financial well-being. So it would help us hone in on, well, what do we really want to focus on? How do we want to get started? And then back to the organization, it was trying to explain that learning is success. So with banking being very risk averse, it was all about, what's the ROI, what's the bottom line, and trying to enhance that culture, change that culture within the bank of how do we adopt a learning culture? How do we just figure out what we've learned and really kind of take the what problems are we solving for our consumers approach. And then I think of it as a Venn diagram of what the bank wants to do is either we're going to partner, invest, or build. And there's a kind of I call it a Venn diagram because it's kind of a combination of those things that we've been doing, all three of those over the past couple of years. But it's just understanding that there's not one right thing to go about it. And so from a fintech perspective, I would say the main thing for us is learning and then making sure we're going to start with partnering with fintechs that I would call have a high capacity for banking. So when we talk to fintechs, our team talks to fintechs, and we talk about things like fair lending, and they kind of say back, well, that's the bank's problem to solve. And I'm like, well, that's like if that's the stance, then we're not really going to work with fintechs that really have a real low capacity for banking and banking knowledge. And again, it doesn't need to be perfect, but it's finding that spectrum of I'm not going to work with a fintech that really wants to put all the problems back on the bank when it comes to regulatory challenges, or I should say challenges, not problems, but I'm more of a marketer, so I kind of think that way. But I would say having some capacity for banking from a fintech perspective is really kind of the two markers that we look at is learning and then capacity for banking.
And how easy was it to get over the hump in terms of selling, having this strategy and be able to sell it going forward and, be able to point to you mentioned the ROI of being able to make that case and also kind of change from a cultural standpoint that this is something we actually want to do and we want to be all in on?
It's still a hump, I would say. It's peaks and valleys being 2 years in. I feel like it's becoming more natural for us from a culture perspective, like you were saying, pivoting. But I would say in terms of the ROI, it's always challenging. You Google Innovator's Dilemma, it's the same thing of how much do you actually invest and spend on disruptive or future tech versus sustainable tech. And so that is, we constantly battle with that internally. But again, it goes back to the macro themes of if it's related to financial well-being and we think it's something that could provide value at some point, we try to balance the portfolio, if you will, and investing at least 10% of our resources into these types of things. But it always, I even got caught in the trap of, well, is this actually going to provide an ROI? Right, and we always battle with that internally. So even within our own team, of really challenging that. So allowing the team to kind of be more free to think about what are we learning, but it's not a one hump. It's an ongoing process. It's an ongoing process. Yeah.
Josh, same question to you in terms of how you approached it.
We were happy to be members of this Center for Financial Services Innovation, and I got to attend a conference, a regional conference in Chicago, as we were beginning to think about kind of what is the existential fate of a small community bank. Like how do we even confront this issue? I mean, we're much smaller, obviously, than First National Bank of Omaha. And it was through that process of being a member of CFSI that we met some really great innovators who were in some ways focused on our core demographic, which are people, individuals, human beings, Main Street, small town people that need community banks. That's the bread and butter of a community bank, is the neighborhood, the town, the small business owner on Main Street. And so if we think about that as the perspective and that is the ethos that we're trying to manifest in our work, then we were able to use that as the initial instigation for getting involved with Fintech. That's been a successful relationship, and it led to more. But the point is really, to me, that it is an existential question about what you are doing as a banker. And to confront it and to draw these big dichotomies between financial technology and our legacy system is really false. It's only a complacency and a taking for granted what has been built over, the technologies of banking that have been built over decades and centuries. We didn't have to build that, so we think that it's a foregone conclusion that that's the way it should be. But that's not true. Those things all were innovations over time and decades that transformed banking, that made banking possible. So as a newbie in banking, the problem is exactly the same. The problem is, how do we build a branch for the future? The branch for the future is online. So let's just do that. And that is where the strategic question came in. And I won't go on too much right now, but I think that the culture issue is the central one. How do we transform cultures to get our people to understand in not just a year of, we've called it a year of learning in our bank. It's been a year of learning. Well, it's never going to go away. It's going to be a year of learning every year. But that's what it is to be in business. That's what it is to do our jobs. So that's kind of the way we've approached it.
Great. And Adam, so obviously Cross River has been very successful in the model. Maybe can talk a little bit about kind of the approach that you've taken, and also maybe highlight some of the differences that it takes in terms of the resources that you need and the infrastructure and how to build it, as opposed to a more traditional banking model.
Sure. I think Cross River is a little bit different than some of the other cases I'm hearing about today, in that we didn't have that one aha moment that said, hey, we have to transform our business model or potentially become, word isn't obsolete, but really adapt. Very early on, the bank's strategy was about fintech and facilitating banking throughout the country. And I read a report last night, and if someone read it, please keep me honest. I think McKinsey said that there's about 35% of the banks in the country that are having this do or die moment as we speak. If someone read it, please feel free to call out. And that's a pretty big number. It's more than a third of the banks in the country are right now saying to themselves, it's either change or die. And again, I'm not sure that they differentiated between community banks and maybe regional banks. I don't think they mean larger banks necessarily. But we didn't have that aha moment, but we did realize early on that the customer of the future didn't have the same needs as the customer of the past. And I think to the point that was just made, we said to ourselves, we could either become like every other bank and start targeting the customers in a very traditional way, or we can allow others to help us do that. And I think that what Cross River has done well is allow each party to contribute their strengths. Right? We're a bank. We know how to do banking, compliance, everything regulatory. And there are fintechs out there that just do a much better job than we do of giving technology to end users and customers. And so that's been really the strategy early on. As far as how you approach those partnerships, at the end of the day, our focus is always going to be on compliance and regulatory oversight and making sure we're meeting the regulations. But we bring that rigor to these fintech companies. And that healthy tension between our desire to adhere to regulations and please our regulators and their ability to bring technology and innovation, I think has been a marriage that actually has worked really, really well. So again, I'm sure the other questions will get into more detail, but we look at these companies as really a true partnership, and they're doing things that, frankly, to your point, we're not as good at as they are. And we're doing things, and we're good at things they're not as good at. So I think it actually works really, really well, and it actually perhaps is a model for the other banks that are facing that do or die moment to think about and say, we have a choice right now. We could stick with what's worked for us for the last however many years, or we can say to ourselves, there's a new horizon coming, and we want to be part of it. And I don't think it's that difficult. I think, to your point about culture, I was commenting before we got up here that I thanked some of the panelists for not wearing a tie. If this were 10 years ago, the first 2 years we were open, it was all suit and tie every day. I would actually say I'm overdressed based on the conferences I usually go to, right? Mm-hmm. I mean, for a fintech conference to have suits and ties is pretty unusual. And that's just a comical analogy, but the reality is that there's been a lot of change, positive change. And I think the ability for the banks that are out there to adjust and adapt their culture to what's coming, I think has been pretty remarkable so far. A lot more has to happen, and there's a lot more to come. But I think conferences like these and the work of MLA and others, I think it really does a lot to really make sure the market is aware of what's happening and make sure the banks are ready to adjust.
Yeah, great. So one of the biggest issues in these types of partnerships is obviously the diligence, right? So there's great benefits of these partnerships, but there's also risks. These are emerging business models. A lot of them don't fit within a particular, from a regulatory perspective, it becomes very challenging, and there's compliance issues associated with that. So maybe Mark S., you can talk a little bit about kind of the compliance approach and the diligence that folks may want to think through, from different perspectives. Obviously, the fintechs need to, they're kind of, a lot of these are early stage companies that are starting from ground zero and they're trying to build up. But obviously, from the banking perspective and having to satisfy regulatory requirements, there's a lot that goes into this.
Yeah, certainly. So the previous panel, we heard from our regulators on the things that they expect of banks. And so if a fintech wants to work with us, then you can expect that our risk management department is going to expect those same things of you. And we have to meet legal requirements. We have to meet those regulatory expectations. But the other thing you have to understand, and this probably is more true the bigger of a bank that you work with, is we also have to worry about our reputation. And so any issues that crop up, even if you're working with my bank, for example, and you're just trying to help us with our small business lending, or maybe you're helping us with deposits, or maybe you're taking us to a product that we don't do right now. Anything that happens that goes wrong with our partnership with you and becomes publicly known is going to affect our entire company. Even at Capital One, the big dog, the credit card business. And so that's something we have to be very careful about. So when we're working with you, and I'll just run off some of the list of what the regulators just said, the things that we're going to want to make sure that you have buttoned up in your operation and that can integrate well with us include any AML compliance, privacy, cyber, and certainly my area then of fair lending as well. And the previous panel spent a lot of time working talking about fair lending. And in fair lending, and one of the things that's really tricky about fair lending right now is marketing. And there's a lot of innovation going on there, both within banks and within fintechs and other companies. And the rules around marketing aren't necessarily perfectly clear. And so that's something we're just going to have to work with you very closely to understand exactly some of the policies and decisions you have so that we can make sure that it works well for us.
Same question to you, Adam, in terms of how you guys approach it and how you look at not only just the initial diligence in deciding to work with someone, but how do you, on an ongoing basis, monitor these relationships?
Sure. I think it's been mentioned before that the bank looks at hundreds of companies on a monthly or annual basis, and the first thing we always start out with are three basics, which is your capital base, your ability to fund your business, your credit, if it's a lending program, and then compliance. Right? I mean, not so dissimilar to some of my fellow panelists here. And that's how we start. That's just the first filter. But I think ultimately, even though we don't like always to come back to compliance, that is certainly the minefield. And it's really getting the companies that we work with to understand that it's not just that we're trying to be a pain, but that it's in their best interest and our best interest to make sure that we're adhering to all the various regulations. You alluded to UDAP before in terms of fair lending or other issues. There are some parts of the law that just aren't as clear as others, and I think that's kind of where some of the tension starts. But I think what's been helpful is the education that we've been able to provide them with, and I think vice versa. I think someone mentioned before about Upstart and the no action letter. There's definitely steps being taken on both sides, on the fintech side, on the bank side, to make sure that we're being transparent and portraying ourselves as just desiring to adhere to regulation and promote positive regulation. And I think that's also, there's a lot of room for improvement there as well, but I think that's actually gone fairly well, and I think it's heading in the right direction. In terms of ongoing monitoring, there isn't a shortage of what we have to do to make sure these companies comply and are overseen with proper oversight, both from a compliance standpoint and safety and soundness as well. And we have an entire bank that's built on that. We worry day and night to make sure that not only are we doing things right, but that our partners are as well. And I think it's getting them over the hump to realize that it's not just them pleasing us, but that every action that they take potentially impacts us as well as them. And that once you get that clearly understood, I think that solves a lot of the problems. And then once you work in a partnership and in harmony, I think the rest kind of goes away. Early on, it was challenging, but I think today, given the attention that's been given to fintech, given the coverage that it's gotten, and given the amount of banks that are now facilitating fintech partnerships, I'm not sure it's as hard as it was back then to get them to understand what's actually required. So actually, I think it's actually fairly easier now than it was maybe 3, 4, 5 years ago.
Mark, any other kind of operational compliance or other challenges that you guys are facing?
Yeah, I was just going to add to what Mark was saying. Our partnership with Upstart, one of the things we did is, so a little bit of background without going into too much detail of, for our pilot with them, we used the referral program where Upstart does all the marketing, and then they refer us if they meet our criteria, and then it becomes our customer basically. But to your point, Mark, our compliance team wanted to look at how they're marketing, because if at the end of the day they're going to show our bank, there's a reputational risk that ties in there, which I think is important. But what I thought was really great, you mentioned harmony around that is, so our compliance, our UDAP market review folks had a face-to-face with Upstart's marketing team and said, we've reviewed your materials, here's some suggested changes. And they actually made quite a few changes to their marketing based on our team's feedback. So I think that's the commingling of the learning of, they actually learned, okay, well, yeah, you're probably right. I guess we hadn't looked at it from that perspective. But then Upstart also provided feedback to our team of, well, this is our point of view on some of these pieces and how we represent the marketing materials. And so then we learn more from them also. So I think that's an example of just getting both people in a room and agreeing what are the real risks here, and willing to work together and change. That was a really good example of that. And then the only thing I'll add is, so we do have a separate third-party oversight team that monitors, now that Upstart's customers are our customers, so we constantly are monitoring SLAs. And again, it's just falling back to, I would call it traditional ways of how you'd manage any partner. The fact that it's a fintech shouldn't change oversight, it shouldn't change model governance, it shouldn't change SLAs. I mean, when you have a partner today doing these things, it's the same type of operation, I would call it. So it's just making sure you don't change anything that you've already set that you're doing. And I like what you said, there's a history of innovation at banks, it's just we've suppressed it over the last 40 years, is kind of how I like to say it. So it's a matter of just re-enabling that, of why do we do this and why do we put all these things in place? It was to help customers and give them access to their money, protect their money, grow their money, all those things. So it's us actually falling back on those departments that have helped protect the bank for so long.
Right. So Josh, you mentioned you mentioned some of the cultural issues and regulatory risks, and also we talked about reputational risk. Maybe are there any specific examples or anything you can point to of pain points or things that you've seen play out?
Well, I think the biggest issue is really goes to this question of whose customer it is. We're here in the context of of talking about fintech bank partnerships because there's been a recognition over the last couple of years that the way that the fintechs can really enter the market is not by deciding that they're going to be banks without being regulated as banks, but in fact by partnering with banks. Well, the question then I think arises about who owns the customer, who owns the customer relationship, and partly it's a natural tension, but it's pretty awkward, really. Because if we have the responsibility as a bank for the consumer compliance, if our regulatory authorities are asking us to know all the details, then that comes with it, I think, the right to really claim that customer. But that's a pain point between a bank and its channel partner. And I think that comes down to as simple or as clear an example as data management. If we need to know the data in order to make sure that we're compliant, then we need to have direct access to the data in real time. And that control of data is control of a lot. It's a big issue about whether you can, who gets the marketing, how does the marketing happen, how do you get access to insight from that? Because for me, at our bank, we very much view this as a process by which we become better at banking, period. and that we can escape in some ways the geographic and the charter constraints that we're faced with as a community bank. But the only way we can do that is if we actually learn about the customers that we're serving. And the only way you can learn about the customers that you're serving is if you have real-time access to the data, where you can delve into it. So the question, the pain point, is to me all around how do we actually benefit? How do banks actually benefit beyond just fee income or interest income? How do we actually benefit in a meaningful way from our partnerships? And data is the key.
I would, to add to that, I think, again, falling back on the Upstart, the aha moment for both Upstart and the bank for a lot of people was, so I mentioned the referral program about how Upstart does the marketing. It's Upstart's onboarding process, and we're just the lender. So we were presented at the very end, and then they become our customer. But what we started seeing a couple things in launching in June of this year, so customers started posting online how great FNBO provided the experience, and we weren't anywhere on Upstart's site until the very end. So you have all these reviews saying, thanks FNBO, this is a great experience, and it was an aha moment for Upstart because they're like, okay, now we're understanding what you mean when you say you need to review this stuff, because they view us as you, when at the end of the day, you're the lender, and they're our customer. And then internally, it was the same thing. It was, oh, well, now we understand why you want to partner with them, because they provide a great customer experience, and they view that as our experience. So it's just an aha moment on both sides.
Right, and it's happened in terms of call volumes. That one of our fintech partners, a company called Self out of Austin, Texas, didn't believe that there would be that we would be visible in any way to our customers. In fact, that's completely not true. They look at us, they see us on the credit report, and they call us. And the volume of calls was simply something we weren't prepared for, and our partner, whom we have a great and strong relationship, never expected. And so dealing with that, like how we manage the visibility and how we then manage the back end that supports that, has been a bit of a friction point.
Yeah, I think you guys are hitting on pretty much the main points of tension in these bank fintech partnerships, which is the customer acquisition, which you can include data and include compliance in terms of UDAP in there, and then credit, right? Because I think people have been critical of the bank fintech partnership, but when you really think about it, it's actually a real benefit to the overall market, because you have two institutions, you have a fintech and you have a bank. One is really good at customer acquisition and tries to really push that envelope on how to acquire a customer, how do they push the envelope on the credit side. And then you have a bank, which knows regulation, understands how to make things palatable to regulators. And they're providing that middle, which can review things critically and really keep the fintech partner in check to some extent. So I actually think, whereas people have been critical of it, hey, what's this partnership? It's a hoax, doesn't make any sense, why are they using fintechs? At the end of the day, I think if I'm a regulator, and I'm not, I look at it like it's really a great way to not mediate, but provide a middle ground where you have a bank that is looking to do the right thing, looking to comply, right? Filtering some of these fintech ideas. And a fintech's job, they're supposed to push the envelope, right? That's their role. That's what they're good at. So we should let them do that and let the banks handle the rigor of the compliance and the credit and the customer acquisition part.
So Mark S.,
if I could add one thing, so the fintech should think about should handle some of those things, but they also need to think about, make sure that when they're making decisions, even before they're in partnership with a bank, that those decisions might be ones that a bank can live with. For example, I'm aware of a bank, and this is very tactical, but a bank that was talking to a fintech, and the fintech had been placing cookies in browsers or on computers that was in a way that the bank's privacy policy, privacy disclosure didn't account for. And so if the bank were to go in partnership with this fintech, they would have had to change millions of privacy disclosures. And so it's one of those things where, and as a banker, that's one of the things we'll want to do with you is get down to really tactical levels on what are your decisions and how do they mesh with the decisions we've already made and what we've already told customers.
Great. So Mark, also, while I have you, so a lot of these banks that have taken advantage of the model have been smaller banks, right? Community banks or smaller banks. on the other side of it, what do you think the issues are for a larger institution, either from a challenge perspective or from a benefit?
Yeah, so it's a little bit hard for me to talk about sort of strategically and financially what are the benefits and the trade-off there. In working with the fintech, presumably we would go into partnership because there's a certain value to that partnership. But for bigger banks, that value as compared to the value of the rest of the bank is probably relatively small. And so that is probably going to affect then some of the decisions we make and how and maybe the likelihood that we would go into partnership. I think we're always looking for new opportunities, and we want to be innovative as well. But we also have to balance that risk against our entire portfolio of risk.
Great. So we have some time for some questions from the audience. Does anyone have any questions? Someone who wants to catch the microphone box. Phil, where are you?
Can you all speak to how the partnerships have worked from a data sharing standpoint? You mentioned you own the customer. Do you see owning the customer and owning the data as one and the same? Or do you see, with these pilot programs, some sort of data sharing with that fintech?
I'll just start. I think data sharing is obviously the right answer because we do not want to presume that we know better. That's not the goal. The goal is, as Adam was pointing out, really to consider these as key strategic partnerships. I think the question is around informing, having it right at the outset of your discussions with your channel partner, be it a bank or be it a fintech company, is what are their data desires? What do they want to do? And is there a way to create some kind of warehouse where the bank can have access to it too in real time? And that's all about your strategic priority around the data. There may be some banks that don't care about that. I absolutely care about it, and so that would be foregrounded in our conversation.
I would add, so we always want to take the approach with a fintech that it's our customer, meaning the fintech and ours. So to the extent that we can share the data, we do. I think what's advantageous for FNBO is we have a history of partnering. We have a very large card business that is almost all partner-based. And so we're very comfortable, and that risk tolerance for us is probably higher than most banks. Of what do we share? We have agent banks we partner with credit cards on, and it's about as high personal information you can get. And so we really are always challenging ourselves of how much can we share with our partners. So I would say it's more natural for us than other banks. The challenge for us is how connected is it? So like a lot of other banks are going through digital transformation, data transformation. So it's very siloed data. So we just want to make sure that we have it put somewhere, and then we'll kind of figure it out later as we want to connect it better. But that's kind of our general approach. I would say we're kind of more advantageous than most banks in our tolerance and our acceptance of that. But it's as open as we can get. As much as we can share, we do.
Great. I think we have a question down front. Oh, wait, just wait.
All right,
here we go.
Melissa?
Here we go. First catch. There it is. All right.
Hey. My question's for Mark Schultz. So obviously you look different than the other banks on the panel there, and you made some interesting points about doing business with fintechs, being a smaller strategic part of your business overall, and not wanting to perhaps cannibalize your existing bigger business. My words, not yours. So if you're looking at it from the fintech business's standpoint, why would a fintech approach you to do business as opposed to one of the smaller players who perhaps has this as a bigger part of their DNA and a bigger part of their business model? What are they looking for in Cap One as compared to the other banks?
Yeah, so I should probably let our marketing people address that one, but I suspect one of the advantages we have is scale. That we bring a lot of scale to any partnership. And we have millions and millions and millions of customers and brand recognition, and if those are things that would work well and in partnership with that fintech, then that might be one of the reasons that you would go with one of the top 10 banks, whether it be Capital One, Citi, Chase, any of the others.
Other questions?
All right.
Go ahead, in front, Eugene.
So when you're looking at the due diligence stage for your potential partners,
how are you vetting or surfacing or bringing up the topic of, hey, are you maybe a money transmitter? Do you know? Have you looked at that in terms of the fintech itself? Because we advise a lot on that on the legal side, and sometimes the company hasn't even really kind of realized that what they may engage in, at least in some states, may qualify.
Well, I would say for being worked at the bank for 18 years, I have a network of people that I can go to. And so I have a pretty good radar, if you will, as far as if we're talking to a fintech, are they hitting kind of some hot topics that I need to go and get advisement on that? So I think the approach I have is I know very little, but I have a lot of people and network of people within the bank that know a lot on specific subjects. So we haven't really formalized it yet. That's just kind of more my style of not wanting to over committee and make bureaucracy out of what our team tries to do. So I'll just send like quick briefs of here's who we're wanting to talk with, here's how their business model, I believe, operates. And we've kind of developed a pretty good cadence of somebody just raising a flag, not saying no, just raising a flag and saying, hey, can you ask them for these 3 things or these 4 things? And so we've gotten better at it because it's not perfect. Like I'll go do it and then all of a sudden I'll get a call and like, I can't believe you're doing XYZ with, ABC company. And I was like, okay, we're not doing anything yet, but let's talk through this. So there's been some, I think it's just a matter of learning as we go. But where I feel like we have an advantage of being at the bank for so long, I can kind of go talk to those people and have that conversation. From that specific point, we've kind of avoided working with fintechs at this point from a money transmitter piece right now. But that's not, it's just by choice of who we're talking to. It's not intentional. It's just we haven't come up against that yet.
I would add that the bank has formalized it, and part of our initial diligence is making sure they've done a licensing review on the lending side and on the payment side. So we have a group that handles that internally, and we also have external counsel that we work with, companies like Manat who do reviews for these companies in all 50 states. So it's actually formally part of our diligence process, and to the extent we have questions that go beyond the initial diligence, we actually use outside counsel as well as internal folks as well.
Do you want one last question? Did you? Anyone else?
It was sort of that, somebody spoke about reputational risk and risk in general, and understanding a little bit more what you see as the biggest reputational risk and how you might take steps to mitigate it.
Anybody?
Yeah, sure. I think reputational risk can come from many different angles. For Capital One of our reputational risks right now would be cyber. It's no secret that there was a breach recently, and so that's something we have to be very careful about. And yeah, if we were to discriminate, so that my world of fair lending, if we were to discriminate, or we had another cyber incident, those things could be very publicly known, and a lot of people might really criticize us or question our ability to do our work.
I think the point he's making is that certainly for banks of our size versus Capital One, the reputational risk is exponential, right, compared to our size. And I think that's why we're very mindful. I think the customer acquisition process is where I believe the most risk is in that reputational risk. But our entire program is built on making sure that we have controls to check those things. So I'm sure some of my fellow panelists from the smaller banks would agree that compared to the size of the banks that maybe are in this space or in these spaces and the partnerships, I think that actually has to be one of our biggest focuses, because if not, very quickly, I think the point made before about things happening really, really fast, it can get out of control very, very easily.
Yeah, I would say, like I mentioned before, partnership is in our DNA. So for a bank that isn't used to partnering or white labeling other people's products and services, or vice versa, I think that's really going to be challenging for them. But the question I always ask internally on this and other topics is, how do we control for reputational risk today? And so then everybody in the room is like, well, we have InfoSec and they just go, I'm like, okay, well, that's how we do it for this. It's not that different. It shouldn't be. So I think you ask those questions of how you do it today, and then people can rattle off all the committees and steering committees and governing bodies and all that kind of stuff. And I'm like, okay, well, let's follow that then. Let's make sure we get those people in the room and ask those questions.
Can I say one more thing? Yep. Honestly, I think Mark's exactly right, but I think there's another question, which is, is reputation risk an excuse not to act? And I think it is. I think it is often an excuse not to act. I think it's a cultural issue that we have in banks. And risk management is our job. That doesn't mean that there are these trump cards that get to be played to eliminate our need to innovate. We cannot just receive the card that says, well, there's a reputation risk involved in that, and it therefore becomes the reason not to act. If we get paid to do risk management, and I think we've all agreed that part of our job is being paid to be good risk managers, then we have to encounter that with process, because we have to act. There's simply no way that with the growth of these biggest banks and their increase in market share, that we can sit back and depend on these issues of these kind of black box issues of reputation to stop us from making the big decisions that we need to survive.
Can I close with a quote? Our CEO always says that our bank's goal is to mitigate risk, not eliminate risk.
Right.
Right? That's our job. So I think when you try to eliminate risk, you won't do anything. If you know to mitigate risk, you can actually act.
It's a great final word. We're out of time, so please join me in thanking the panel.